Welcome back to the Japan FinTech Observer. Get ready for a quick hit of the latest news in Japanese finance and fintech. We're diving into the headlines, breaking down the trends, and leaving you with the insights you need to stay ahead of the curve. Let's go.
All right, so get this. We're talking record-breaking profits, even blowing past projections. And guess what? The source. It's a Japanese bank.
Yeah, a Japanese bank making waves in the financial world. We're diving deep today into MUFG's third quarter earnings for the fiscal year ending March 31st, 2025. You know, MUFG, right? Japan's largest megabank.
We've got our trusty guides for this deep dive, a detailed earnings review straight from Goldman Sachs and the financial highlights fresh from MUFG themselves. So what are we after today? Well, we're going to uncover just what fueled these crazy good results. We'll dissect how each of their business units performed, and we're going to analyze how the Bank of Japan's recent interest rate hike might just reshape their future.
Let's kick things off with the big news. MUFG pulled in a record net income of $1,748.9 billion for the first three quarters. That's not just beating projections, that's actually smashing their previous full-year profit record.
Okay, so that's huge. What's the secret sauce behind this profit surge?
Two main ingredients in this success story. First, their core customer business is absolutely on fire. And second, they've been strategically selling off chunks of their strategic shareholdings.
So they're trimming the fat and doubling down on what works. But let's zoom in a bit. Where's the most impressive growth happening within those customer segments?
Their customer segment's business segment saw a mind-blowing 30% year-over-year increase in net operating profits, landing at a massive $1,714.6 billion. This segment practically single-handedly delivered that record profit.
30%, that's like a rocket ship. It seems MUFG really knows how to cater to their core customers. Any insights into which specific areas within this segment are driving this phenomenal performance?
Global commercial banking is a real standout here. They managed to rake in an extra $153.8 billion in profit year over year. This tells me they're really tapping into the needs of corporate clients, maybe through some innovative lending solutions or perhaps a deep understanding of the shifting Japanese business landscape.
So that's one piece of the puzzle. Booming customer segments, particularly global commercial banking. Did all of MUFG's business lines share this success, though?
Not exactly. Their global markets business actually hit some turbulence, posting a pretty significant loss of $123.4 billion year over year.
Huh. Almost like they're playing two different games within the same company. This contrast in performance is definitely interesting. Anything else we should know about their different business lines?
Well, there's one factor that adds a little wrinkle to the story. A change in the consolidated closing period for Krungsri, the Bank of Ayutthaya in Thailand. This shift has actually impacted the numbers across many business segments. It makes those direct year-over-year comparisons a bit tricky.
So you got to take those comparisons with a grain of salt. It's like judging a race where everyone started at different times.
Yeah.
Anything else jumping out at you about these earnings before we jump into those Bank of Japan rate hikes?
One thing that caught my eye was a slight bump in MUFG's expense ratio. They're pointing to inflation as a contributor, which isn't surprising given the global economic climate. But they've also highlighted strategic investments as a factor.
So even with those record profits, they're still spending to fuel future growth. Now let's talk about the Bank of Japan's interest rate hike. That's a pretty big deal, right?
Oh, absolutely. The Bank of Japan has kept interest rates super low for ages. This sudden change is a big deal, not just for MUFG, but for the entire Japanese economy, like a seismic shift in the financial landscape.
Okay, you've got my attention. Tell me more about what this rate hike could mean for MUFG and the bigger picture of Japanese banking.
So the Bank of Japan's move to raise interest rates could be a real game changer for MUFG. They've actually already crunched the numbers trying to figure out how it'll hit their earnings.
Wow, they didn't waste any time, did they? What kind of impact are we talking about here?
MUFG's estimates suggest the rate hike will give them a nice boost. About $20 billion in pre-tax benefits in fiscal year 2025. But that's just the beginning. They're projecting even bigger gains in the following years, $110 billion in 2026 and a whopping $160 billion in 2027.
Those are some seriously impressive numbers. But you know how it is with projections.
Right.
There are always a ton of assumptions baked in.
You're absolutely right. It's important to remember that these projections are based on the idea that both policy and market rates stay put after this first hike. But in reality, tons of factors could influence how things actually shake out.
So it's not a sure thing, but it definitely paints a rosy picture for MUFG's future earnings. But taking a step back for a second, these rate hikes won't just affect MUFG's profits.
Right.
What about the whole Japanese banking scene?
Exactly. Higher interest rates could be a huge win for the entire banking sector, potentially boosting profitability across the board. But there's a flip side too. higher borrowing costs for consumers could actually put the brakes on economic growth if things aren't handled carefully.
So it's a bit of a tightrope walk. Higher interest rates are a double-edged sword. But let's zero in on MUFG. Are there any other hints in their earnings that suggest they're ready to ride this new interest rate wave?
If we peek at their lending strategies, both domestically and overseas, we'll see some intriguing patterns.
Okay, lay it on me. What are you seeing?
On the home front, MUFG is seeing steady growth in corporate lending. This points to a solid level of confidence in the Japanese economy and suggests that there's room for continued expansion in this area. On the other hand, their overseas loan balance has actually shrunk by about 0.5 trillion since the last fiscal year ended.
So they're playing it safe internationally, given all the global uncertainty. Makes sense, right?
Absolutely. This strategy suggests they're laser-focused on squeezing the most returns out of a stable environment, while keeping their exposure to potential risks abroad in check.
Smart move. Okay, their lending strategies are making sense. What about the rate hike's specific impact on those lending activities?
Well, there's one key metric that gives us some clues. The domestic lending deposit spread, to put it simply. This spread is the difference between the interest rates banks charge on loans and the interest rates they pay on deposits.
Gotcha. So a wider spread equals more profit from lending.
Right.
What's happening with MUFG spread?
In the third quarter, their domestic lending deposit spread was 0.86%. That's up 5 basis points year over year and 1 basis point quarter over quarter. These might seem like tiny changes, but for a giant like MUFG, even small shifts can mean big money.
You're telling me those tiny percentages can add up to millions, maybe even billions of yen.
Exactly, and this really underscores how sensitive a bank's profitability is to interest rate changes. Even small tweaks can have a massive impact on their bottom line.
Okay, so their lending strategies and that lending deposit spread are looking pretty good in light of these rate hikes. But let's not forget about those unrealized losses on their foreign bond holdings. They mentioned those, right?
They did, and it's worth circling back to those figures to see how they might be affected by the changing interest rate landscape.
Let's dig into those unrealized losses. Remind me what's going on there.
At the end of December, MUFG reported unrealized losses, including their hedging positions, of about 4.5 trillion on their foreign bond holdings. What's interesting is that this figure didn't budge from the previous quarter.
So even with their hedging strategies, they haven't been able to completely shield themselves from those market swings. It seems like those hedges might not be working as well as they had hoped.
That's a valid point. It just goes to show how tough it is to manage risk in a volatile global market, even with all the fancy financial tools. But let's not forget, hedging is complicated. Their strategies might be designed to minimize losses over the long haul, rather than perfectly counter every short-term blip.
True. We can't jump to conclusions based on just one quarter, but it's definitely something to watch. Any other interesting tidbits about those foreign bond holdings?
Well, there's one detail that grabbed my attention. The average duration on their Japanese government bond holdings has actually stretched out to 3.4 years. That's up from just 1.9 years at the end of the second quarter.
Okay, break this down for me. What exactly does duration mean in this context? And why is it important that it's gone up?
Duration, in simple terms, measures how sensitive a bond is to interest rate changes. A longer duration means the bond's price will swing more wildly as interest rates move up or down.
Ah, I see. So by increasing the duration of their bond holdings, MUFG is basically betting that interest rates will either stay steady or even go down in the future. If rates were to spike suddenly, they could be in for a rough ride.
Exactly. It's a calculated gamble, and it suggests MUFG has a certain level of confidence in their outlook for the Japanese economy and the future direction of interest rates.
It's like they're playing chess, trying to anticipate their opponent's next move. This is fascinating stuff. So we've covered their lending strategies, the impact of rate hikes, and the potential risks tied to their bond holdings. But there's one piece of the puzzle we haven't touched on yet, those strategic shareholdings they're planning to sell off.
You're right. Those divestitures are a key part of MUFG's overall game plan and could have major implications for their future earnings and their position within the Japanese financial landscape.
Let's dive into those divestitures. Remind me what their plan is.
MUFG has set a pretty ambitious goal to reduce their strategic shareholdings, those cross-holdings in other Japanese companies, by a massive 700 billion by the end of fiscal year 2027. And they're not just talking about it, they're already taking action. By the end of the third quarter, they already knocked out 32% of that target.
Wow, they're moving fast. It's clear they're serious about streamlining their portfolio and potentially freeing up capital for other investments. But it makes you wonder, What are they going to do with all that freed up cash?
That's the million-dollar question, isn't it? But there are some hints in their recent moves. Remember that little uptick in their expense ratio we talked about earlier? Well, they specifically mentioned that part of that increase is because of investments aimed at boosting future profitability.
So they're not just letting that cash gather dust. They're actively reinvesting in their business. That suggests a pretty forward-thinking approach. But do we have any more specific insights into where they're funneling those investments?
They haven't spilled all the beans yet, but we can glean some insights from their third quarter results. They've highlighted strong performance in their U.S. capital markets-related businesses and equity method investment income, especially from Morgan Stanley. This suggests a strategic focus on opportunities with high growth potential, both domestically and internationally.
So they're not shying away from international opportunities. Even though they're being more cautious with their overseas lending, it seems like they're striking a balance.
Yeah.
Managing risk while still tapping into global opportunities.
Exactly. It's a nuanced approach, recognizing that the global landscape is complex and requires careful navigation.
Okay, so they're divesting shareholdings, reinvesting in strategic areas, and carefully navigating global opportunities. Anything else about their financial performance we should be paying attention to?
There's one more element that gives us valuable insight into their overall financial health. Their credit costs.
Credit costs. Can you explain that one to me?
Credit costs are basically the funds banks set aside to cover potential losses from loans that might go bad. It's essentially a way to measure how risky their lending activities are.
I get it. So lower credit costs generally mean a healthier loan portfolio and a better managed risk profile. And what's the situation with MUFG's credit costs?
Their net credit costs for the third quarter landed at $251.0 billion. Now, that might seem like a big number, but it's actually a significant improvement compared to their full-year guidance of $400 billion.
So they're actually doing better than they expected when it comes to managing credit risk? That's a positive sign, right?
Absolutely. It could mean a better-than-expected credit environment, or maybe they've been really successful at minimizing risk within their loan portfolio.
But wait a minute. Didn't you say they were being more cautious with overseas lending? Wouldn't that suggest lower credit costs internationally?
You're sharp. That's where things get interesting. While the parent bank and their domestic subsidiaries actually saw reversals of credit cost provisions, meaning they released some previously set-aside funds, their overseas credit costs actually ticked up a bit.
So their domestic credit risk is improving, but their international credit risk is inching up. It's like they're navigating two different credit worlds, each with its own set of challenges and opportunities.
Precisely. And this really reinforces the need for a flexible and adaptable approach to managing risk across their global portfolio.
All right, we've covered a ton of ground here. From the overall impact of the Bank of Japan's rate hikes to the specifics of MUFG's lending strategies, bond holdings, strategic divestitures, and credit costs, I'm starting to see a bigger picture coming together. But I still have some questions about how all these pieces fit together and what it means for the future of MUFG and the Japanese banking sector as a whole.
You're right. I think it's time to connect the dots and zoom out to consider the broader implications of MUFG's performance. I think we're ready to tackle that bigger picture. Now,
all right, we're back and ready to wrap up our MUFG earnings deep dive. It's been a wild ride through their financials.
it has. We've dug deep into their performance and analyzed the impact of those Bank of Japan rate hikes.
Exactly. We've explored those record profits, their strategic moves, those intriguing lending trends, and their approach to managing risk. Now it's time to connect the dots. Zoom out and see the bigger picture.
Ready to consider the broader implications of MUFG's performance and what it might signal for the future of Japanese banking.
Absolutely. Let's do this.
All right, so let's start with MUFG's laser focus on their core customer business, especially domestic commercial banking. This is a clear signal that they're betting big on the continued growth and stability of the Japanese economy.
Like they're putting their money where their mouth is.
Right.
Not just talking about the strength of the Japanese economy, but actually investing in it through those lending activities.
Exactly. This move suggests they're banking on sustained lending activity, favorable interest rate conditions, and a resilient corporate sector in Japan. But here's where things get even more interesting. They're also shedding those traditional cross-holdings. You know, those strategic shareholdings that have been a mainstay of Japanese corporate culture for so long?
Right, it's like they're ripping up the old playbook and writing a new one. What's the thinking behind this strategic shift?
By selling off these holdings, MUFG is signaling a move towards greater portfolio flexibility and a potential focus on higher growth investments. They're essentially freeing up capital to chase opportunities that align with their vision for the future.
So it's not just about streamlining, it's about strategic repositioning. They're choosing to allocate their resources in a way that maximizes their potential for growth and profitability.
Exactly. And this bold move could have a ripple effect throughout the Japanese banking sector. As other banks see MUFG's success, they might be inspired to rethink their own investment strategies and maybe even follow suit.
It could set off a wave of change, reshaping the traditional landscape of Japanese corporate finance. Now, let's not forget about that wild card in all of this, the Bank of Japan's interest rate hike.
Oh yeah, that policy shift throws another wrench into the works. While MUFG seems to be in a good spot to benefit from higher interest rates, it creates a whole new dynamic for the entire banking sector.
Higher interest rates can be a double-edged sword, right?
Yeah.
We talked about how they can boost bank profitability, but they can also hit consumer borrowing costs and potentially put the brakes on economic growth if things aren't managed carefully.
Exactly. It's a delicate balancing act, and it'll be interesting to see how the Bank of Japan navigates this new territory. MUFG's performance, though, suggests they're approaching this new reality with a mix of confidence and caution. They're taking advantage of the potential benefits while also keeping a close eye on the potential risks.
Speaking of risks, let's not forget about those unrealized losses on their foreign bond holdings. It's a reminder that even with record profits and a seemingly bright future, there are still challenges and uncertainties on the horizon.
Absolutely. MUFG's experience highlights the importance of having sophisticated risk management strategies, especially in today's interconnected and unpredictable global financial landscape. Their ability to effectively hedge against potential losses will be crucial to staying successful over the long haul.
It's a constant game of adaptation, isn't it?
Right.
They have to be agile and responsive to stay ahead of the curve. But here's what I find really impressive. MUFG's dedication to investing in future growth, even as they're celebrating their current wins. They're not resting on their laurels. They're actively searching for ways to boost their long-term profitability.
That's a key takeaway for our listeners. Sustainable success in any industry means striking a balance between maximizing current performance and investing in future capabilities. MUFG's actions suggest they understand this delicate balance and are making strategic decisions to ensure their continued growth and relevance for years to come.
So what does all of this mean for MUFG and the Japanese banking sector as a whole? It feels like we're at a turning point, a shift in the tides.
Definitely, MUFG is charting a new course, one that embraces both tradition and innovation. They're leveraging the strengths of the Japanese economy while also adapting to the realities of a rapidly changing global financial landscape. Their actions could very well set a new standard for the entire industry.
It's an exciting time to be watching it all unfold. As other banks observe MUFG's successes and challenges, they'll probably adjust their own strategies accordingly.
Yeah.
This could lead to a more dynamic and competitive banking scene in Japan, which would ultimately benefit both consumers and businesses.
Absolutely. And here's a final thought-provoking question for our listeners. As MUFG reduces its dependence on those traditional cross-holdings, what impact will that have on the complex web of relationships that has long defined Japanese corporate culture? Will we see a more independent and competitive corporate environment, or will new forms of interconnectedness emerge?
It's a question worth pondering. The Japanese economy is at a crossroads, and MUFG's strategic decisions could very well shape its trajectory in the coming years.
We'll definitely be keeping a close eye on these developments, and we encourage you to do the same. Stay informed, stay curious, and until next time, keep diving deep.
And that wraps up our deep dive into MUFG's third quarter earnings. We uncovered record profits, strategic shifts, and got a glimpse into the future of Japanese banking. Thanks for joining us.